The biggest gains in crypto are made in October, and this year, the setup could be the strongest we've seen thus far. October, we know, has a history of making our portfolios, making our bags grow. And right now, the signals are flashing simultaneously, perfectly feeding into our projected expectations for this bullish month. And we see whales, or large investors, are going aggressively long in futures too, confirming our belief this month will be bullish after all. ETFs are pulling in billions as well. Stablecoins are hitting historic highs, and altcoins, even the so-called dino coins, are waking up. All of this is converging in the most volatile month, a month that has written some of the biggest chapters in crypto's history. So in today's show, we're gonna break down why October is primed to be explosive and the signals you need to be watching and how to position yourself, how to put yourself into place as this cycle takes off and accelerates. And you'll wanna stay tuned until the very end because I have something special for you, a play, an investment opportunity that could put even more fuel behind your portfolio bags. And this is not hype. You know that I always share both pros and cons. I share the data behind all the tokens I share with you because I take your finances very seriously and my responsibility to bring you sound information very seriously as well. Let's start with the macro storm. The S&P 500 just closed September up 3.28%, beating the 10-year average of negative 1.74%. October usually averages a 1.4% gain, and we're already up nearly 1% in the first 3 days. And at the same time, U.S. equities keep printing new all-time highs, while the government sits in shutdown mode. Prediction markets expected to last 13 days, so we'll see, and we'll be tracking it carefully here at my channel, which, if it is closed for 13 days, would make it the 5th longest government shutdown in history. Now, if you watched my video yesterday, you would know this is actually a positive thing for markets. Historically, markets tend to rally after government shutdowns. Moving on, Treasury buybacks are adding fuel to this setup as well. We see $4.9 billion in debt repurchased this week alone. Trump is now floating $1,000 to $2,000 stimulus check, which is what the market really needs in order to really kick off its rally. And Trump says these stimulus checks will be funded by tariff revenue. Incredible. So we're seeing rate cuts, stagflation, and stimulus checks all lining up, colliding in the same quarter to add to October's narrative, which inevitably will create a wave of liquidity pressure markets haven't seen in years. So this is literally the most bullish setup we have ever seen on all four fronts. And if we take a look at Bitcoin's technicals specifically, because the market follows Bitcoin, Bitcoin informs the rest of the market. We see that Bitcoin's weekly stock RSI just crossed bullish. And historically, that has meant an average rally of 35%. And a move like this, like that, from here points straight towards 6 figures in the mid 100s. Right now, 120, 123,000 is what we're seeing at the time of this video. So this is creating the fresh support line from which we can hope and expect, based off of all the details I just shared with you that are going on in the market will pump from here. Bitcoin should pump from here. And if it sticks through the weekend, analysts say price discovery could resume as early as next week. Now, that said, keep in mind that we are still, I don't want to say at odds, but still in play with global market makers, and they still have to take profits. So that doesn't mean it's going to be up only. And I have to throw this in as a caveat because I don't want later to be held responsible for saying that it's going to go up only. In general, October is supposed to go up, but that doesn't mean there will not be small corrections along the way. Anyway, let's keep going, because this news is very, very bullish. And actually, cycle analyst Bob Lucas says we're starting a brand new weekly cycle, already trading above the highest weekly close in history. So that is how momentum builds, guys. And traders were eyeing the CME futures gap around 110,000, a level that often pulls price back. But sellers couldn't push it down far enough. And instead, whales have gone net long by nearly 1.8 billion in October. Whales on CME and Binance are pressing the bet that momentum continues higher. And CME's ETF options are booming too, with IBIT open interest climbing towards $40 billion. And soon, CME will be running crypto futures 24 hours a day, 7 days a week. And once this happens, those weekend gaps that traders watch so closely may disappear altogether. So this is why I have been saying again and again and again on my channel lately, if you've been following, that I believe this bull run is going to be so different. And it looks like it's very much so breaking away and creating its own patterns. And we'll have to see what that pans out to look as the rest of the quarter rolls out. So now let us shift gears to talk about the flows coming in from the institutions, because ETF flows have been monumental. Since September 29th, Bitcoin ETFs have stayed green in the positive. And on October 2nd, just a couple days ago, BlackRock added 466 million in a single day, pushing their total net flows to 627 million. Ethereum ETFs are pulling their weight too, with another 307 million that same day. And now Van Eck has filed for a Lido staked ETH ETF, showing the altcoin ETF race is heating up. And it's not just ETFs. We see Strategy's Bitcoin NAV has climbed to a record 77.4 billion. And just as a quick refresher, NAV simply means the total value of their Bitcoin holdings. So it's basically what their stash is worth if you add it all up. And stablecoins are breaking records as well, which we know is one of the key indicators we follow. As money comes into stablecoins, it makes its way into altcoins. It's the gateway. And stablecoins have been topping 175 billion in market cap, with 177 billion now sitting on Ethereum and Solana, also hitting all-time highs. And Tether, one of the key indicators actually within stablecoins, has added another $1 billion worth of Bitcoin last quarter. So to put things into perspective, stablecoins now make up more than 1% of the entire US money supply. How fast and how far have we come since Bitcoin's ETFs were approved? Because I believe that's when things really shifted. And then Trump's election, of course, accelerated things. But that was only a year ago. And now stablecoins make up 1% of the US money supply. It's truly radical what we're seeing going on. Zooming over to take a look at what the cycle roadmap looks like. Right now, we see that CoinGlass, which tracks 30 different peak indicators, is saying that none of them are flashing right now. The three I always watch, and I've shared them here on my channel. Let me know if you have questions about them, and perhaps I'll make specific videos on each of these. I have made a video on these, I think a month or 2 months ago. So feel free to take a look in my videos, or I'll link it below. Anyway, these key indicators we track are the Pi cycle top, the MVRV Z-score, and the Rodel ratio. And right now, none of these are near the danger zones. Just quickly as a recap, Pi cycle compares two moving averages to spot overheated price action, and it isn't close to crossing, which means we have a lot more ground to cover before we should be looking at the bull run ending, is what it says. And the MVRV measures how far price has run above actual invested capital. And at the moment, it's around 2, well under the 7 to 9 danger level zone. And RODL, that is RHODL, like HODL, but with an R at the beginning, shows when short-term holders dominate over long-term holders. And it's still mid-range with long-term hands in control, which is very healthy. It means these people are not going to be selling or dumping on us, collapsing the market. So we're nowhere near a peak. And market data shows the last 2 bull markets each lasted 1,064 days. And if we were to keep to this past historical pattern, which we may not, it may go longer, right? But that's our only point of reference. So if we were to fall within that range of 1,064 days, the top would land near October 27th. And if institutions are running their own models too, if we were to take them into consideration, JP Morgan says that on a volatility adjusted basis versus gold, Bitcoin has 42% upside to align with gold flows, which signals significant room to run. And the big picture, which I always think is almost one of the biggest and most important factors, right now, the big picture tells us that if we look back to 2011, $1 bought 10 million sats or Satoshis. And today, $1 buys just 828 Satoshis. That's the story of monetization unfolding right in front of us. So, okay, now let us talk about what I know most of you want to talk about, and that is altcoin season. We know it's heating up because Bitcoin dominance is bouncing, which usually means Bitcoin takes the spotlight first. But because we're seeing even old dino coins like Litecoin, Dash, Zcash, and Verge starting to pump recently, this signals that fresh liquidity is moving into the market. And we see Solana is breaking out of a cup and handle pattern, which is a classic bullish setup. And Sui, one of my personal favorites, is ranking second in net inflows behind Starknet, all while BNB just hit a new all-time high of $1,010 per token, and Avalanche's DEXs cleared 37 billion in Q3 volume, while Aave now ranks 36th among US banks and deposits with $75 billion. So you see the altcoin total market cap fractal shows the same breakout and retest pattern we saw in 2017, only magnified for this cycle. And the others chart also shows that once money flows outside the top 10, the biggest moves happen fast. That's why it's so important you tune into my videos every day, because this is what I'm covering every day, and I do it for free if you haven't noticed. So we are going to be following the market here closely. So thank you for joining me. And let's keep going. As I promised in the beginning of my video, here's the surprise I've been saving for you. A token that's been making serious noise, okay, and could add real fuel to this cycle. What token am I talking about? That is Pump. Right now, we see Fiddle Corporation, which is soon to be rebranded as Solana Australia, just bought 216.8 million Pump tokens, backed by a 100 million financing facility to accumulate Solana. And Pump is the native token of Pump.Fun, the meme coin launchpad on Solana. Now, does that mean meme coins are going to go ballistic this month? I don't know. Maybe, maybe not. Clearly, Fiddle Corporation may think so. Hence why they're putting their money behind it. But we have yet to see how the market actually plays out. And I think so probably actually meme coins are probably going to fly a little bit because they're the easiest, lowest hanging fruit, and people like memes. So, and money flows where attention goes. So chances are meme coins are going to come back. Now, remember, and please remember my words as I say them right now, that does not mean it's going to last past this season. So if you do get into memes, get in and get out. That's all I can tell you. But it's not financial advice. Anyway, back to Pump.Fun. We know their market cap of 2.5 billion is up 90% this month. And here's why it's catching attention. Pump.Fun is valued at $7.1 billion versus Hyperliquid's $50 billion. Yet it generates over half of the revenue, and it trades at 9x revenue compared to Hyperliquid's 43 multiple. And it buys back 19% compared to Hyperliquid's 8%. And on top of that, it now has more than 100,000 on-chain tokens, many of which I have to emphasize will not be here in a year or two, but for now they are. So whether you love meme coins or not, if you know me, you know how I feel about them. I think they're volatile and you have to go into them prepared to lose all your money. But there is a formula. And I thought about making a whole video about it, but then I feel like I'm somehow endorsing it and empowering you to be reckless, which doesn't feel right. But I will tell you there is a rhyme and a reason. And if I ever share any meme coins with you here, I will tell you why. Anyway, that is why some call it Pump.Fun, one of the highest beta plays in Solana's rotation. So, okay, guys, as we wrap up today's video, and happy Friday, by the way. Let's recall what we covered today. Today we covered key signals that are acting like market catalysts right now. And each piece is laying the foundation of a system being built in real time. And that's where this story points to next. We see a monumental shift in the way money is perceived, what it allows for, and we're seeing shifts that El Salvador, for instance, demonstrates through its education system, requiring all its citizens to learn about Bitcoin's infrastructure and financial power. So can you imagine what the world will look like in 1 generation from now? And most importantly, for this moment in time, we know that October historically is bullish. So we see what began as an experiment on the edges of the internet is embedding itself into the core of the financial system. Each new policy, each new treasury we see, and each new adoption milestone is locking it deeper into place. And the question for all of us is how early we choose to take action on this and position ourselves while the foundation is still being built, while it's still early, because it is. So I love you guys so much. That's a wrap for today's video, and I'll catch you in my video on Monday.